Hi, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Tuesday, August 12, 2008. In Japan last evening, it was reported that annual inflation at the wholesale level accelerated to a 27-year high of 7.1% in July. That's a big jump from the 5.6% increase seen in June and overshot expectations. This index measures the price that companies pay to procure goods for production. Japanese household confidence fell yet again in July to the lowest level since records began in June of 1982, declining to 31.4 from 32.6 in June. Higher prices for energy and food, a weakening labor market, and slower economic growth are all weighing down Japanese moods and tightening spending habits. A last piece of poor data from Japan showed that the final version of industrial production in June fell 2.2%, a weaker number than the preliminary release. The National Australian Bank Survey of Business Conditions slumped again in July, falling 5 points to -5. That continues a clear downtrend in conditions since January. Meanwhile, the Business Confidence Index remained anemic at a -9. The poor fundamentals has caused the RBA to take a dovish stance and has pressured the Aussie in the last couple of weeks. The Aussie slid against the US dollar for an 11th straight session, testing 0.87. That's the longest losing streak since 1975. The Department for Communities and Local Government said today that its housing price index showed prices in June to be 0.6% higher compared to June of last year. That's a drop-off from May's downwardly revised 3%. Last week, the HBO saw its index declining 8.8% on the year, the largest fall in almost a quarter century. Consumer prices, meanwhile, continued climbing, rising to 4.4% on an annual basis, the highest pace since comparable records began in 1997, and was higher than expected. Core prices were up 1.9% and was flat on the month. With consumers facing higher prices, the BRC Retail Sales Monitor showed sales falling 0.9% compared to a year ago. The UK economy is battered by the housing sector, which is now spreading into all facets of the economy. The pound-yen, a volatile pair linked to carry trade and sentiments about UK interest rates, has been in a sharp decline the last 4 sessions. The sterling was down 200 pips on the day and more than 500 pips down since hitting a high at 213.90 on Thursday. The pound continued its decline against the US dollar as well. The pound-dollar pair broke below 1.91 and declined about 100 pips to find support near 1.8970. Here, the pound has also dropped more than 500 pips in the last 4 sessions. In the U.S., a surge in exports helped shrink the June trade deficit to $56.8 billion, a surprising dollar-positive result. Imports were up 1.8% as the U.S. paid a higher price for oil. Meanwhile, boosted by the lower dollar, exports jumped 4%, the largest monthly growth since February of 2004. The euro-dollar hit a new low at 1.4815 overnight, then rebounded about 140 pips to test resistance at 1.4670, which held. In New York trading following the U.S. trade data, the dollar began climbing again. The last 2 intraday highs have been successively lower, a sign of dollar resilience. In Canada, the trade balance rose to 5.8 billion Canadian dollars in June, higher than expected. Exports were up 3.1%, with those going to the U.S. up 5.3%. Imports grew 2%, the 3rd monthly increase in a row. The U.S. dollar-Canadian dollar fell in favor of the Loonie following the Canadian trade report. From its level near 1.07, the pair dipped about 70 pips to trade near 1.0630, cutting into some of the recent gains seen Monday. Tonight, Japan releases GDP data for the 2nd quarter, which is expected to show a decline. Australia follows up by releasing data on consumer confidence and wages. Overnight, the UK releases its claimant count, along with the Bank of England's quarterly inflation report. Also overnight, the Eurozone will post its industrial production data. Tomorrow morning, the US releases reports on retail sales, import prices, and business inventory. And that wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com. Until next time, happy trading.